I mean, Jason, it felt as though the market had decided that he had pivoted, and he hadn't.
I tend to agree. We saw the market rebound from the June lows pretty materially into last week and get back to premium valuations. In fact, we would argue that we are sitting at 75th percentile valuations for the broad market, which is meaningfully above fair value. And if you think about this environment, this is an environment that we think has pretty kind of simple structure to it. You have above average inflation that's forcing the Fed's hands. You have a Fed tightening at a relatively rapid pace, and that's bringing about slowing economic growth and rising risk of recession. And you have a market that is effectively pricing as if that wasn't happening up until today. So this reaction is, from our perspective, kind of a hey, finally the markets are getting it a little bit. This Fed is going to do what it needs to do properly. It's doing the right thing in trying to address recession. And the economic output or impact of doing that is not perfect, and therefore prices shouldn't be, or stocks should not be priced for perfection in an environment like that.
How do you think then about sort of equity markets going forward if we do believe that the path for rates is also higher, maybe more aggressively than the equity markets previously thought?
Yeah, so I think there's two things to that. Number one is the Fed's doing what it needs to do. Right, they are going to, if they stay on target, kind of like Volcker in the 70s, you stay on target, you can bring inflation down. That's a good thing for the financial markets long term. On a near-term basis, we think there's a growing risk of recession on a near-term basis, and it might be a light recession, but it's a recession nevertheless, and stock markets probably need to reflect a greater likelihood of that point in time, and that's what we're thinking about it in the near term. What does that mean we do as investors? Well, look, it means we actually carry a little bit less equities at this point in time. We take a little bit more defensive of a posture at this point in time. Within equities, we tilt towards the more quality-oriented items or places where we think we're getting better valuation because we want a little bit of embedded defensiveness as a result.